Good evening, everyone. If you can hear me well, please give me some reaction in chat. Sound is perfect. That's nice. I have a microphone, so everything should be fine. Let's just give it like 2-3 minutes so everybody can join the conference, the stream, and we will start. Today we're gonna speak about the structure, as still a lot of people are struggling with that thing, and regarding the risk management, about your favorite leverage, how to search for the altcoins, the shitcoins, as the market performed not as bad as I was thinking about for the last week. So I think that will be useful for you to know how to search for the coins, how they should look like, and of course about the crypto portfolio, how to manage your portfolio, what should be inside, what should be the percentage inside of the coins, and so on. So if you're gonna have some questions, you just can prepare them and I will answer in the end of the stream. Again, as always, for the smartest question, I'm gonna present the Hello Trading, our materials, our library that includes a lot of things for the crypto and forex market, the methodical materials, and of course the automatic trading journal and emotional journal. I would say that the emotional journal is one of the important thing in this notion on our platform that I'm gonna present to for the smartest question, because everybody are speaking about the psychology and why, and like speaking about the thing that it is so important and you need to control, to keep calm, to be patient and so on, but nobody knows in fact how to manage your psychology. And to be honest, it's really 80% of your success, if not more. And in Hello Trading and our platform, you can see there are a lot of not just articles, but that's just like checklists that you need to answer, and where you can understand either the problem in your trading is really according to your psychology, and if it is according to psychology, what is actually a problem, or if it is, or is it just like a trading problem, you just don't know how to read the charts and you need to spend more time with your backtest and setups and so on. So that might be quite useful for you. How would you suggest to structure the risk management for crypto? Is it valid for trading or investing? Of course, the risk management is should be applied everywhere. And about the hedge, it's a bit more deep topic. That's more about to diversify the markets, the funds on the different markets like crypto, maybe forex, and different terms of investing, of course, like trading, or maybe it's swing trades or long-term trades. Of course, they all should have different risk percentages involved with the according to the deposit and the money management and the percentage about having that in your portfolio. I'm gonna explain more detail. Let's just wait 1-2 minutes more. Not too much people right now, but I don't think the time zone is suitable for everyone who wants to look, who wants to hear for the conference, but they're gonna watch it in the recording. That's not a problem. So let's go. Still waiting, but GM, yeah. Good morning, good afternoon, and good evening. Okay, so let's start. Today we're gonna speak the first topic. That's gonna be the correct structure, then the risk management, then the coins, and the crypto portfolio. So let's start from the beginning. Let's start from the correct structure. First of all, I will always it's GMT plus 7. I'm located. So first of all, I will start from the structure because a lot of people still don't know about the the double top or double bottom, and they think that this is some kind of support or resistance or supply and demand or whatever they can call that, and some of you are still just using the leverage and do not calculate your risks, and some of you are just do not use the stop losses at all, and some of you are just sitting in one trade or not only in one trade but just like in 3, 4, 5 trades in a row. Some of you just likes to trade every day, every minute, waiting for a call, wants to trade in the indices and commodities and crypto everywhere. You just do not concentrate on one asset, on one market. You're just waiting for something. You're just trying to take the opportunity from every move, from every from every small fuel that is on the market, like at any day, on the weekends and so on. That's totally incorrect, of course, and we'll speak about that. But first of all, let's speak about the structure. I will show the schematic example, and after that I will show the graphic example, so you will know the difference and how to implement that on the chart. That's so important. First of all, I'm gonna go for our mentorship program, so you will see everything on the in the nice examples. So we have a lot of classic. I think you should see that now. I don't know about the delay, but I hope it's nice. A bit fizzy screen? What do you mean? You have the delay or what? Do you have the delay or not? I don't know. For example, I'm scrolling down right now, and right now I'm scrolling up. Did you see that? The delay should be minimal, so you can watch it after in the 4K. So everything is perfect. Yeah, let's continue. Okay, so there are a lot of QM, or that's called Quasimodo, or just a simple reversal. I mean, there are different types of the reversals and how they look like, and that's just like a models that you should look like that you should look on the higher time frame and lower time frame to combine them together. There are like a lot of them. They look similar to each other, but with the slight differences. There is a classic sell Quasimodo or a classic buy from Extremum, where the high time frame, when we are coming to the point of interest zone for the high time frame, like if we are executing that on the lower time frame, like M15 or something like that, we should come to the high time frame POE, like let's say 1 or 4 hour. And on when we are coming here, we need to be more focused and to backtest what type of reversal is working better for us and for our risk management as well, that we are gonna talk about a little bit later. So these are like the classic buy Quasimodo with a range. When we have some kind of reversal on the lower time frame, after that we have that a little bit bigger side, then we are coming lower, accumulating some liquidity, collecting that liquidity, and of course that is our entry, and we are entering from from this deviation. But again, the point of interest is here. So there are a lot of them that are exist on the market, but try to understand the logic. The stream is I don't know why it's showing 360 right now, but okay. So okay. So there are like, let me start from the beginning. There is a point of interest zone. Once again, point of interest zone can be performed with the different ways. It's something conditional that the traders are using. The traders are using in different ways. The point of interest can be presented with different things. It could be an order block, it could be the liquidity pool, it could be an imbalance. Somebody is using that as well, but that's could not be an actually the proper point of interest zone. But that's not a problem at all. I just will show briefly about the thing that we should have here. So let's say this is like a point of interest. Yeah, and now we are coming. This is our order block. You can see that why it isn't an order block, because the order block was collecting the liquidity over here and was changing the structure over here. So this is the reversal. That's the place where we're changing the structure. So that's the reversal, and that's all that thing in the gray zone that's called sell to buy move, in which we can find that it depends on the structure actually, but that can be as an order block or in a sell to buy move or in the bigger zone of the sell to buy move. Why it is sell to buy move? Because we are dumping and then pumping, yeah, selling and then buying. So in this bigger sell to buy move, we can find it can be found the order block. Inside of it can be found the imbalance, and inside of it can be found the breaker block that is over here. So it's just something conditional. Do not pay much attention onto that thing. So the point of interest, it can be as huge, it can be it can become smaller. Depends on your strategy. Let's just pretend that there is some kind of point of interest zone that is in the discount. That's most of all, that's the most important part. So there is like, as you remember from maybe from the last conferences, there is one impulse and the retracement. Again, impulse, retracement. That could not be two retracements or two impulses in a row, right? There is only one impulse and one retracement, and each of them are having low and high, low and high. If inside of that, if inside of the last impulse, yeah, we're only considering when we have the latest impulse, this impulse we do not consider for our trading. We do not care about it right now, and this one as well. So when we have the new impulse that caused us the change of character, we only should care about the latest low and the latest high. That's all what we should care about. To think about our further trades, because if the market will go lower than that, than this low, then we have the reversal. If the market will go higher than this high, then we are updating the structure and we have the new impulse. This one and this one. This is our new impulse. That's the only thing that we need to care about. So that's the general things. Until that thing, a lot of you are confused when of course it's not always perfect like that, and a lot of you are confused when the structure is starting to do like that, and you start to be confused. What to do in this situation? Where is where is the high and the important low? Where is the important high? And what to do with the structure that is like that? Again, you just simply need to remember about this low and about this high. And until the price is still inside of this impulse, right? Something inside of it, that's all called the internal structure, and this all doesn't matter for us as such. So depends on what time frame we are looking at. Let's say this is like an 1 hour time frame, so and this is like 1 hour structure, right? So according to the 1 hour structure that we are looking at and trying to consider about to check what is the trend on this time frame, particular time frame. So we should understand that until the price is inside, it's still the uptrend. Doesn't matter how long it will spend over here. It is an uptrend. Yeah, it is not confirmed for the next one until we're gonna move here, yeah, to break the structure or to have the BOS or break of the structure to confirm our uptrend structure. And it is not a reversal yet, because the reversal will happen when the price with the body of the candle will break this low. Until that thing, this is all the minor structure, or let's say internal structure, that we should not care about, that's not important for us. What is more important for us is to look for the next thing. So when we have that impulse that we should care about, yeah, we should, as it was on this example, we should just draw our discount and premium. I mean, you should understand that this is the general things, and you need to understand that I mean, there are the market is always unique, and that will be slight differences. So do not try to remember the beautiful pictures or something like that. Try to understand the logic. Yeah, as I'm always saying, when we are talking about the indicators and all other scam shit, sorry for that. There is no logic in all these indicators and all these EMAs, Bollingers, ABCDA indicators and so on. They are all like explaining some kind of thing that even I can't understand, all that spaceships and all that kind of stuff. When we are saying about the logic, we can understand that there is like a liquidity, and the price is trying to be balanced and to collect the liquidity according to the trend. When the price did the imbalance and did the retracement, we are coming to the retracement. The retracement is always taking a slow momentum, a longer time than for our impulse, because the impulse, it's not just one candle. It can be performed as one candle, maybe two, like something like that. And 5, 10, 15 candles, 100 candles can be our retracement. So you will not miss where is the you will not misunderstand where is the impulse and where is the retracement or the pullback or whatever you like to call it. So you need to wait when the retracement will come into the discount zone, and into the discount zone you need to find this order block or something like that. And here, that's the place where we need to look for the synchronization of our time frames, where the price need to do something like the phase that's called the first of 3 phases, that is called accumulation or the range or something, where you see the liquidity is been forming from one of the side and from the other side, where the liquidity is not collected. You can call that as a double bottom, you can call that as a double bottom or the double top, doesn't matter. That's all the liquidity or the magnet for the price. And this is actually a good sign if we could see that thing near our potential point of interest zone. Yeah, why it is the potential point of interest zone? Because the price is in the discount, so the price is in a good zone where the probability of our trade to happen for the next break of the structure, yeah, for the next target that we have over here, yeah. In this low our target is this high, in this low our target is this high, yeah, and in this low our potential target is this high, not somewhere here, just this one. We don't know how far the price will go. It's just collecting the liquidity and going for the retracement, yeah, collecting the liquidity and giving the reaction to have a pullback. Collecting the liquidity, giving the reaction to have a pullback. That's all simple to understand. You just need to work on the charts more and to backtest it. So that is why when the price is in the discount zone, of course it's much better for us to have the potential bigger diapason to catch all this movement. So we just need to wait for our formation. We just need to wait for the fuel, and the fuel will be given here when the price will come here on the manipulation phase, the second phase after the accumulation, we have the manipulation. Manipulation means the big players are manipulating. Let's say that manipulating. They're not chasing your stop losses or something like that. Yeah, they're just pushing the price down, especially to collect all that liquidity and to get their bigger orders with this type of liquidity that was over here with the limit orders and with the buy orders and so on, because their order is so huge and it needs some fuel to be filled. Yeah, there is no such supply that will propose them such liquidity on that type of level, because if they're gonna put like 1 billion with of their order at just one time with one click, yeah, the price will go like that, and the middle price where the order will be filled will be somewhere here, but that's already the order, that's already the place where they want to get out. Yeah, so that would not be so important thing. That is why they're accumulating with that liquidity to collect it and to fill that order. They've been filling their order for all that thing, for all that range, for all this time. After that, they're finishing to fill that order on the touching the opposite side. Yeah, so they're actually that's called a hedge for the bigger players. So they're providing liquidity by themselves. They're opening the trade in short, yeah, in the play at the direction that they don't need to open, where they're gonna lose money, but this money they are providing to themselves. So this amount of money they're providing when they're opening the long order, these money are floating into their own bigger order size of the long position, of the long trade. So that's how they can fill their big long order, and that is why it's called sell to buy move, and that is why we have manipulation. And of course, after the order is filled, we are having the reaction in the proper place. We are having the reaction to the opposite side, and this is actually the third phase that is called distribution. Yeah, so that is the only three phases how the market can move, like the accumulation, manipulation, and the distribution. And the distribution is basically our impulse. That's what we need to look for. And this impulse is going straight to our target. So when this thing is happening, we need to look more, precise on our lower time frame that is happening somewhere here. And the thing that is happening somewhere here, that is nothing else like our reversal. And when the reversal is happened, the test of the zone has happened. Why the test of the zone is happening, and what is the logic behind that thing? So let's pretend that this is something like a range. This is something like the sweep of the liquidity. Yeah, we are collecting the liquidity, making the manipulation, touching the zone with a lot of liquidity as well, the protected zone, the most discounted and well-balanced zone for the price. Yeah, and after that we are making the distribution. The distribution to the other side, collecting the liquidity from the other side, and at the same time making the break of the structure, making the reversal. So now the first impulse, where you're all trying to jump in and you're doing that and you're rushing the things, you're doing that too early. Yeah, you still don't know. You're hoping, you're buying somewhere here and hoping that the price will do the reversal over here. But sometimes this zone that you identified might not be correct, and the price might just continue moving down, and you will catch your stop loss, so there is no sense in it. So when the reaction is happened and when the first impulse is happened over here with the reversal, that's the time where you need to be more focused, and that's the time where you need to wait for your discount zone as well. Yeah, the same thing as you're waiting for your discount zone on the higher time frame, you're waiting that here. You're still drawing the discount and so on. And now you need to understand why the price is coming to the discount zone, why you should put your order like that, and what is the logic of this test, why the price is coming back to the retracement. So, as you remember, as I was telling you, the big player is trying to manipulate with the price. So he is providing the liquidity to himself, right? So he is selling the order at the direction that he doesn't need to provide the liquidity to himself to buy this order, right? So when he did that and he collect the liquidity, fill the order, push the price, so what is happening right now? The big player is having two orders open right now, right? The one order is in long that he is starting to earn money from, and the second one is short, actually that was the first one, right? That he is not earning money from. And what he need to do? He need to close his short order, right? So he needs to come back at the place where he was opening the order, at the place of the of this discount zone. Yeah, actually that's an why it's like that. And so now he is coming back, he is closing his short order where he was losing money, and now the only big order is left over right now. So now everything is filled, the order is filled, one order is remained, and now nothing else is nothing else should be done here as sorry, I mean only the long here should exist right now. So nothing can stop right now the big player from going high. So the big player calling that thing is just like to coming back to close his hedge short order, and we as a retail traders are calling that as a retest or test or confirmation of the reversal, where we can enter the trade and to start trade with this big player according to the side where he wants. Yeah, we should not trade against the trend, or basically saying against the big player. We should just trade according to the trend or with a big player. Where the big player wants, we need to go with him. We just need to wait when all the manipulations with the money or with his order he will finish, so we can just jump in the right place and to go with him in this distribution phase, in this impulse, right? We don't want to sit for ages in this retracement on the pullback. That is why we don't want to trade against the trend. We just need to wait all that thing, all these setups, and to enter with this big player. That's our goal. And of course, on the way of the main target of the external liquidity, yeah, not on the internal that is over here. Yeah, of course, this is like a lower time frame short trend. Yeah, waiting for the lower time frame short trend, and now waiting when the reversal will happen. So now the bigger trend that was long will be synchronized with the lower time frame that is long over here as well. Yeah, and now the big player is going to the main target of the external liquidity to break the structure of the higher time frame, and by that thing he is also collecting all that liquidity that was left before. That is all. That's how we are doing that. Now, as you know the logic now, and as you know the logic of all that thing with the how to collect the liquidity, why the market is first of all doing the accumulation, manipulation and distribution, now we can move to the main topic about the correct structure and why it is so important to understand the difference between the correct structure or the that is basically called the order flow, right? You might heard it before, and the basic structure that is actually not useful for us. What are the difference? I'll show you the two basically type of structures. This is the standard structure. Impulse retracement, impulse retracement, impulse retracement. This one is the order flow. So these are two type of structures, and you will never see that type of the structure, or you will see that type of the structure that's called a normal structure that you used to see everywhere in TikTok and so on, of course, but that's called liquidity. So what is the market is aiming to do? Of course, the market, when it's going into the uptrend over here with the impulse and retracement, so what the market is aiming? He is aiming to collect the liquidity among the trend. So he is collecting from each of the high the liquidity from, yeah, that was high and low. So now the liquidity left here and the liquidity left here. but the market is as it is in the uptrend. He's aiming to collect the liquidity among the trend. So every short traders that were putting their stop losses over here or limit orders, doesn't matter, yeah, he's collecting that. After collecting, the price is going to the pullback because it's having the reaction, yeah, all this fuel stopping the market to go further up. So he needs to have some pullback to come back, and again there's a new liquidity that is over here forming that he wants to collect as fast as possible, and that is why the market is moving from one liquidity to another. And that's the only logical thing how you can look at the market, and the vision how you can look at it. No any indicators and no any all the thing will tell you that. All these things will just, it's a mess, yeah, but the market is not the mess. The market is just about the liquidity and the human's psychology. It's not chasing anything, it's just moving like that. It's just the formula of the market. It's just how the market works. So, and again, so he's leaving the liquidity here and collecting the liquidity from that part, yeah, making the, like, let's say for now, let's say this is a break of structure, but this is not a break of structure. We're just collecting the liquidity. And when we are looking at that structure right now, we can see that there are a lot of lows with the liquidity that wasn't collected yet. So yeah, the trend is uptrend, that is correct. And you are, as a conscious trader, drew the Fibonacci with the settings with the 1, 0, 5 and 0 with these strings background. That's how it looks like. You can rewatch the conference after to set it correctly. Yeah, where is it? You can find it, Fibo retracement in the Fibonacci, put it in the favorites, and then in favorites you can use these favorites with your star over here, and having that a small tab with a fast menu to go for that thing. So, and you as a conscious trader, you're looking for the discount and for the premium, and you're looking for the price to come to the discount, and you want to take the trade, of course, to the next uptrend, because you see that the trend is uptrend, and why not to take it, yeah? But there is only the one slight detail. The price also wants to come up, but beside that fact, the price can see that there is a lot of liquidity that is here. The liquidity shows in more the wicks, and that's not about the wicks. The liquidity is below the wicks or upper the wicks. Yeah, do not ignore the wicks. The wicks are the part of the candle. It's just showing where the candle was during that period of time, and then where it was the open and where it was the close of it. But the liquidity is here, the liquidity is here, the liquidity is here. That's not something that you are used to look for. It's not just one simple line that you saw in the internet, like this is support line or this is a resistance line. Yeah, forget about that funny scam thing. This is a zone. Yeah, some of you of course heard about the supply and demand zone, and this is more likely to that. So this is not something like one line, this is like a huge zone. So this is a huge zone of the liquidity. Yeah, even collection on one small pip, it can be counted as a liquidity collection. So more we are collecting that, more liquidity was here, and it basically means that we need more liquidity to collect before starting a new pullback. So that's a zone. But that's not about that. So you as a conscious trader was thinking to go for the long trade right now, and you are trying to take the trend, the long trade. But there is only one slight detail, is that beside the fact that the market wants to go for that liquidity, there is also this liquidity, and this liquidity that was uncollected yet. And the market with the bear's eye is looking into that liquidity and saying, oh, wait a minute, I want to collect that liquidity too. So taking this trade in such type of structure is quite risky. So what the market will aim to do first before going to the next long trade is to collect the liquidity from this low, and this low, and only after that to continue going up. So basically, when you're looking at this structure, this is not a proper structure that you need to look at all. And this is not basically an impulse and retracement, and this is not a breakout structure. And only after we have that liquidity collection, yeah, I will draw it like that, and you will see that why I drew it like that. We collected the liquidity from this low, and this low, and you could see the strong big manipulation to collect all this liquidity, and after that the strong big distribution that will actually do what? That will form a break of structure, the proper and the onlyest one. This is the break of structure right now. And now, when there is, you can see the proper break of structure, they did all the manipulations, they did all the things, collecting the liquidity below this low. It's called sell to buy move, or it's called this one is a sell to buy move, or it's called the, you can see inside of it, you can see the order block on the lower time frame, or whatever. And now this low, it's called a manipulated low. So when you're putting your stop losses in this type of trend beside this low, you are just forming the liquidity, and you're starting to be liquidity for the future moves, for the manipulations, and then you're just crying and saying, oh, the market is so manipulated, they took my stop loss and then going back up where I was thinking about my trade, so my vision was correct, but unfortunately it collects my liquidity exactly at the place where I had my stop loss. Why it's happened like that, and so on. And that is why, because you're looking not for this proper structure and for the not proper liquidity. This is a manipulation low, the sell to buy low, swing low, the proper swing low, and this is the proper point of interest zone. And now that's the place after we have the breakout structure where, so this is the number one, let's say, thing that we need to have, collection of the liquidity pool. This is number two, forming the break of structure. This is number three, forming the imbalance inside. And this is number four, in slow momentum, coming back. In the what? In the discount zone, of course. Now, to look for the discount zone, to look for the potential trade, that's a proper zone. And now you can look for the reversal and go for the next uptrend. Yeah, and by having the, either you are having the risky stop loss behind this low, yeah, because of course if everything was if you followed all the rules in the lower time frame, the same rules as on the high time frame, but just on the smaller one, yeah, that's one, this low and putting the stop loss behind this low will be quite safe. But if you didn't want to put that thing and you didn't want to watch for the synchronization, reversal and all that same thing that you saw here, but you didn't want to wait for that, the same thing over here, you just need to put your stop loss here, and that's gonna be the safe stop loss. Just why it's like that? Just because this stop loss, this low was already a manipulated low. We already collected all liquidity, so there is no sense for the price to come lower and to collect this liquidity as well. So putting that stop loss behind that low will be as much logical as as it can be. Why it's like that? Why there is so important to put the stop losses? Just because you are not a traders, most of you are a hopers. And why you're just not putting a stop loss? Because you're thinking that, oh, I don't know how to look at all that thing, it's too complicated for me, I just want to have my signals and so on. I'll just open the trade because Scrooge told us that there is something like that, I can see the sweep and so on. I don't want to follow all the rules, synchronization, that's too complicated for me. So I will just open the trade and I will not put a stop loss. I will hope that the price will come back here up and that's all. Yeah. Of course, I'm sure that it's gonna be exactly like that. You can laugh right now, but believe me, I know that that's majority of those who are watching me. So I will not put the stop loss, and even if the price will come here, you'll say, ah, maybe this is just one more manipulation, I'm gonna wait more. I don't care that I will lose more than 1% right now. I think that the price needed to retrace. I still believe, yeah, because you're as a hopers, you have your own beliefs about the market, you have your own vision. And if you were thinking for the half of the day or for the 2 days or maybe for 1 week it was a dump market, and now the new week is starting and you are thinking like, oh, this week it should be long 100%, and you can see some kind of similar situation where it should be long, but you believe that it should be long, but the price suddenly continues to go lower and lower and lower and lower and lower and lower. Yeah, and now you have minus 30% of your deposit, and now you have like, oh, there is an impulse, fine, I will not close my position because I'm almost near my break even. When the price will come back to my break even, I will close my position. Yeah, so now you're not worrying about to earn your money. Now you're worrying about not to lose your whole deposit and to close it at the break even, or at least at the place where you entered. And you're thinking, oh, please God, come back to my entry. I will not do like that anymore, but just come to my entry. I want to close my trade at 0. Yeah, but the market just making the retracement and coming next back to the according to the trend, according to the short trend. And that's all, and that's how you're getting liquidated. That is why we need to use the stop losses. But the stop losses should not be set just because it is a stop loss and Scrooge told us to set a stop loss. No, the stop loss should be in the proper zone, behind the manipulative high or manipulative low. Why it should be set exactly here? Just because there is a manipulative low that the price do not need to collect. And if the price will suddenly decide to collect that low here, that will basically means that the price did the reversal. And now the trend is not anymore a long trend. And if the trend is right now is a short, so the price did the reversal, yeah, the price might go in some kind of retracement right now, but only at the same way as we did for a long time. It will be a pullback to the long to continue the next short, because what the price did the reversal. So in this case there is no sense for us to keep the to keep the open long trade, and because coming lower than this low will invalidate our idea of holding our long trade. Yeah, we are playing the probabilities and we can't be sure all the time, but according to the proper risk management, we can follow our risk and we can allow ourselves to lose some kind of couple of percentages. In this case, it should be just 1%, yeah? And that's a normal thing. So potentially next time when we're gonna be right, we're gonna earn potential 3% or maybe 4% according to the potential losing 1, yeah? And in this case, this is a proper risk management, because there is no more sense to potentially lose 2 or 3 or 4% or maybe 20 or 50% to earn potential 3 or 4. Yeah, this is just simply not logical. What is the price action about, or what is what I'm trying to teach you, and why this information is so useful according to all that scam indicators and all this technical analysis that is in the internet, in the free materials, right? That all the things are not saying you the logic. They're all trying to just say, oh, this is a double bottom, so you need to put your stop loss behind the thing. And you're like, oh, okay, so this is the rule, I need to follow it. I'm still new to the trading, so I just will simply follow that. I don't care about the logic and why it needs to be like that, but I just will simply follow it. But right now, I hope you're gonna be a conscious trader that will put their stop loss at the places where it will invalidate your idea. The same thing, you can invert the scale and you can see that the place, it should be above the manipulated high, yeah, that will invalidate your idea of the next long trade, of your short trade, sorry, because the price will reverse to the long. Right now it will be the reversal, yeah, it will be a sweep right now, and this is gonna be a reversal. So that's how it is been made. Just briefly we'll look to your comments. Yeah, somebody who've been there, somebody is still there, you know. So this is just an improper structure, and if you can see the structure without liquidity sweeps on the way, like that, then you should not consider that as a structure, yeah, because if you see just simply think like that, believe me, this is not a structure. This is whole the liquidity pool. Some of scam traders can call that trend line, but believe me, there is trend lines are not exist. Again, because no logic in all that thing. What in fact is it? It's called trend liquidity. Trend liquidity is the magnet for the price, as well as we are in the range forming the liquidity, yeah, as we are in the triangle forming the liquidity, as we are in the compression without any proper structure forming the liquidity, yeah, to collect as fast as possible, as we are in the just proper impulse retracement, again without any sweep liquidity collection, forming a liquidity to collect it as fast as possible after, and to did either the reaction to the opposite side, either to just continue moving down to collect the next liquidity over here. It depends. But this is all the liquidity that the market is aiming to collect. So the proper structure is looks like that right now, and this is like the sweep, break of the structure. Now this is like our point of entry zone. This is our discount, something like that. Yeah. Why it's not this low? Why I'm not putting until this high? Why I'm putting until this high? Because you remember that it needs to be swept, right? So if we have the impulse, then the pullback, and then again the impulse, this low is not important for us, or we can call that a low that needs to be manipulated, or the low for the major for the next liquidity. And you can see that this low didn't touch any order block yet, so this is a low that is left for future, for the price to come to collect it and to touch our order block, yeah, to get a fuel for the next impulse. So what is basically, where is basically the break of structure? It's here, yeah, but not sorry, but not here, yeah. This is a break of structure. So when we are counting where is the important low, this one is an important low, and this one as an important high. But this high and this low, it's not important for us, because basically that's without any liquidity sweep. When we have the liquidity sweep and when we have the new high formed, now this is our important low and this is our important low, high, sorry. You would say that this is might be a potential reversal. No, this is just a liquidity sweep. But when we are coming to the low that did a liquidity sweep, yeah, now that will be a reversal. Only after we collect, or after we break the manipulative low, now it is a potential reversal, right, forming over here. But not when we just, let's say, like that. Yeah, so we have important low, important high. We have the break of structure, that's all the liquidity pool. So when the price is coming here and making that thing, that's not a reversal. That thing, that's not a reversal. That thing, it's not a reversal. Yeah, this all collection of the liquidity to go next up. Only after we will break this low, we did this sweep, now this is a reversal. So please be careful about the correct structure. I will show on the graphic examples as well. So try to understand that right now on these examples on the graphic of the schematic example. So after that we're gonna move to the graphic one. So yeah, and now you could see the sweep. So if you see the sweep, now it is our important low, important high. And only after that manipulative things, we can look for the discount and premium to wait for the price to come into the discount. And now we can look for that thing to come into the discount. Somewhere the price will not come into the discount. And that basically means that that's not our trade that we should look like. In this situation, we should skip it. Yeah, it followed all the rules, it did the sweep, everything was fine, that was the reversal and all that thing, but the price simply not in the discount. So we should just skip the trade, because look at that thing. I'm just draw about 5 or 6 or 7 legs. It will happen all the time. If it didn't happen here, it will happen later. So don't be frustrated. If you saw the perfect structure, but it didn't follow the rules with the discount, it's okay. But you don't need to avoid your rules, right? And to say like, whatever, everything is beautiful, so I will open it. No. Just wait patiently for the next situation where the price will be in the situation that will give you the highest probability. Yeah, you will not be even with everything followed with the structure and with everything is correct. The price still can do some unexpected things. That is why we are saying about the probabilities, yeah? But you need to wait for the highest potential probability that you know that is working for you. And when the price will come to this finally with the discount zone, yeah, you will say, oh, this is my trade, and now you can take the trade. And that's only like that. Yeah, this is our trade. That should be like that. Follow the chart, killing emotions. Yeah, I mean, you see, killing the emotions are the second part. It's the psychology part that we are also, of course, teaching in the academy, but that's not what we need to work with at the first thing. Firstly, we need to understand how to read the chart. Then we need to understand what is your comfortable amount to trade, because most of you are starting from the to take the big amount straight away, and of course leverages and so on. You didn't even see that money in front of your eyes, never, but you can see how you're losing them with the 1 or 2 seconds on the exchange, on the Binance and so on. So your psychology is not prepared for that type of or amount of the money. You need to be prepared for that. Of course, that's the crucial thing. Sometimes the money can be, for example, you're earning like, I don't know, $3,000 or $4,000 or $5,000 per month, but you decided to start trading with a small amount like $100 or $200. Of course, in this case, if you're trading on $100, your 1% risk per trade is $1. You will not care about this $1 at all. Yeah. You lose, whatever, I lose. You will not analyze this stop loss, you will not be happy about your win of that, if you're gonna win the trade and so on, because the money is too little for you. So you need to find the ideal balance where you're gonna be serious about your trades, but you will not be afraid to open the trades or to catch your probability that can be negative for some period of time before starting to be positive. Yeah, so you need to be aware that this is a part of the game. So to kill that emotion, just found your comfortable amount of money that you are ready to trade with, and you are ready to count all the thing in the percentage, not at the money evaluation. Yeah, you don't need to say, oh, I have $100, or see, John, yesterday I won like $2,000. No, nobody care about your amount of dollars. Every trader, every professional trader cares only about the percentage. You know that already, but I just need to remind you about that. So you need to say, oh, John, can you imagine, yesterday I did 20% from my deposit. Actually, that's quite a huge amount from your deposit just for one trade, and of course that's not it means that you are over risking, and the pro trader gonna understand that. But I mean, oh John, yesterday I did 3 or 4% from my trade according to my deposit. Yeah, so it basically means doesn't matter how much money did you have, but that basically means that you did a good amount of money with the followed risk. So if you had like $100, you did like $4 according to your deposit. And believe me, this is a good percentage according to your deposit. I know, and I know. At the beginning, that might be not as good for you in a quantity of money. But if you can follow that risk, if you can follow that money, if you can follow that amount for the that statistic for maybe half a year, 1 year, every investor gonna chase you and gonna look for gonna call all your friends to ask where are you and to please take my millions to trade with this risk that you were following on the $500, and that's your goal. Your goal is not to earn as much as possible from your $100 to make double every day from your amount. No, that's not the goal. The goal is to make a good statistic, so when the big money will come to your arms, you're gonna do the same thing, the same percentage, but just on the bigger amount, where of course this percentage in the equivalent of money will worth to spend the time on. Yeah, so spend the time on with the smaller amounts to study the trading, to study your emotions, to study your psychology, to develop the rules of your own strategy, because there is no holy grail and there is no one strategy that will work for all of you. There is only a strategy that can suit your lifestyle, your personal lifestyle and character. Because me or John or Peter or everybody else, they're having different psychology. Yeah, some of them are having a happy life with a happy wives. Some of them are not. Some of them are having the I don't know, the credits. Some of them are having the house and mortgages. Some of them just after the clinic or after the accident. They need to pay for something. They need to think about their son or their family or their, I don't know what, marriage. And a lot of problems, a lot of different things that can affect our psychology. Different time zone, different favorites about the market. Do we like crypto market or forex market? Of course, if we need to focus on one market, because for each of the market it's different strategy, right? So a lot of things that are makes us different, and that is why there is no strategy that will suit to each of us, and that is what we are trying to develop in the academy, is to develop your own strategy that will suit only you. That is so important. I mean, it's crucial. It's crucially important. I don't know how else I need to say that. Okay, so that's about the structure, a bit of psychology and so on. Now let's move to some examples on the chart. You see, this is actually a sweep. You see, one low, again, you might see that impulse, retracement, impulse, retracement, impulse, retracement, impulse, and you will say that, oh, now this is the time. I want to wait for the pullback to go into the discount, like it was here, like it was, oh, I can see that the price came into the discount here, the price came into the discount here, yeah, the price came into the discount, almost not came, but almost came here. So now I'm gonna wait for the discount here to catch the next uptrend, and that's gonna be the biggest your problem, because even what I'm saying, what about the liquidity? Yeah, if you will watch more carefully, you would see that on the lower time frame, the price was collecting some kind of equal lows, yeah, and getting the order block over here, having the touch of it, again collecting some time of liquidity, having again the new order block, and so on. Again, collecting some type of liquidity and having the reaction. But that only matters for the local for the local structure, but not for the higher time frame structure. On the higher time frame structure, if you're gonna look at that thing like this, you will see that this is just one like this one, and like this too. where this one, this second, and this third, and this fourth is our what? A liquidity pool, right? This whole thing. So when we are collecting that liquidity pool, now you need to understand that now the price came back exactly, touched our the last low, even it was over here, this one as well. Yeah, you can see everything, all these things we collected. And we did as well, what is so important is to make a local sweep as well, this one. Yeah, that's for our lower time frame structure, not just the biggest structure liquidity sweep with the wick, yeah, and you see the reaction to the opposite side, but for the local one as well. The only thing that didn't happen here that you were expecting for is the retracement. Yeah, in some cases the price will not retrace and you will not catch the trade. So in this case, I mean, looking at this time frame, you would skip the situation, but in our case, we knew that that was a news in this time, and we just we waited for the proper structure on the lower time frame to catch the continuation. So that was the liquidity sweep here. You can perfectly see that, right? And that was as well as the proper zone. But here we remember that was where is it? Sessions. Yeah. We were working as an intraday traders according to the trend. We understood that all the liquidity here was collected, the liquidity among the trend was collected, and what is left only over here is to wait for the news. So in news, with the London, we collected the Frankfurt low, we collected some local liquidity here, internal liquidity, not so important one. But what was more important for us is to catch the trade somewhere here, maybe with the market order, or something like that. We know that this low was a manipulated low, we don't need to go lower. So what is basically the biggest target for the price right now after collecting? I want to make sure that you understand the difference. What was more important here, yeah, after collecting the external liquidity from the bottom, is to collect the external liquidity from the top. And that was this high, and this high of this whole liquidity that was uncollected yet. And that was a target for the news, for the NFM, non-farming news. Yeah, that was on Friday, yesterday. And this big candle on Euro, and the same thing on for GBP happened for us, and that's what we were waiting for. And we were sure to catch our trade somewhere here in Frankfurt or in London session, and just we need some small structure like 5 minutes to confirm our entry and to wait for the news to go for the external liquidity as fast as possible. So you could see that the liquidity, the news are not changing our direction of the market, because if all the liquidity was collected from the bottom, the only way where the market could go is to collect the liquidity from the top, and that's all. The news is not something that will change the market, or it's something unpredictable or something like that. No, all direction is of course encrypted in the price, and if the price was aiming to collect the liquidity from the top, so the news will just help us to go to collect that liquidity as fast as possible, not for maybe 3 or 4 hours, but just for 1 or 2 minutes, according to the importance of the news. And that's all. So that's how it's look like that. Now I want to explain you about we have a bit lack of time already because we have too much questions. I want to explain you about the risk management. So when I'm saying you about the risk management, still a lot of people here do not know how to calculate the money. Again, a brief example of schematic. So we know that we want to enter somewhere here. There are two types of orders. You know that there is like a limit order and the market order, and so you need to choose why to open like that or like that. We are, as a conscious traders, we always should look for the limit order, because if we know the situation, if we know how to read the market, we already know that when the market will come here, for example, yeah, we know that we need to buy somewhere here. So if we know already in prior that we need to buy that here, we just need to open the limit order in advance. We don't need to open with the market order, because if the market order, we will, like right now, to our main target where we need to exit, right? This is the only logical exit, this is the only logical entry, and this is the only logical stop loss. So according to all these rules, we have the risk reward ratio 3-to-1. So for example, if we have $100 and we are risking per our stop loss is 1% risk. So means that when we're gonna move 3 times like our 1% of stop loss, 1, 2, and 3, that's gonna be 3% here. That's our proper risk management that we need to follow. I mean, one of them that we need to follow, and this is the best one, because I mean, if you're looking for the highest risk reward, you will be incorrect most of the times. But even if you're incorrect about reading your chart and you're taking just following just 3%, 3 risk reward, even if you are incorrect, the price will push your profit target, and then will continue moving in the short trend or something like that. So this is one of the best risk reward that I am suggesting, but of course it all depends on the strategy and so on. So that simply means when we are following, you see the risk reward ratio 3-to-1. So 3-to-1 means that in case of if the price will fill our order and will not go here but will go to the stop loss, we're gonna lose 1%. So basically minus $1. Here, if the price will reach this place, we're gonna earn 3%, or basically $3. That's all. That's not about leverage. That's not about anything else. That's not about, like, forget about the leverage. Just forget about the leverage, please. If you have the leverage, for example, x2, so that basically means that you have x2 of your risk. And now that's gonna be your $2 instead of 1. But our risk management per trade was 1%. Why it should be 2? So yeah, potentially we might earn 6, but we might lose 2 instead of 1. But our goal is not to chase this part. Our goal is to chase this part, our risk management, not our profit. We are not rats that are chasing profits. We are the businessmen and the traders who are chasing the percentages. And that's the most important thing. So when we have that thing, we know that our risk reward is 3-to-1. We want to follow that risk, and doesn't matter which size of the stop loss will be here. Would it be like that? Would it be like that? If it is our account size, let's say, so for the easy count, it would be like maybe $100, let's say. Yeah, lot size is always 1, because it basically means you're opening only one trade at a time, and your risk percentage and your risk. Yeah, so basically what you can afford in your trade. So that's basically means you can afford only 1% risk. You don't want more, you don't need more, because it's simply you're gonna lose to the mess, but not to the market on the long term, right? So you can afford yourself to lose 1%, or basically $1. That's all what you can afford. You don't need more and you don't want more. So you calculating all that thing, you're putting okay, and if it is the euro market, it's a little bit different, as that's gonna be in lot sizes. So let's just for a second open, that's a second type of the calculation. Yeah, so basically 3-to-1, 1, 1, 1. So this is the quantity that is showing to you. Doesn't matter which amount do you have. Like, I mean, you have $100 of your account size, yeah? And basically, according to this account size, this is the quantity that you need to open the trade on like 0.005 of Bitcoins to follow that risk according to the position size that you opened over here, yeah? It can be on the different time frames and can be anything. It can be on short trade as well, like this, yeah? Basically it's the second indicator, so you also need to go for the and to set it once again for the short position type. It can be founded here, long position and short position. So this is a quantity that you need to insert. Sometimes you will not have, because maybe your stop loss will be so small, yeah, you will not have such quantity to follow to have that 1% risk. So in this case, it will ask you to use the leverage to follow the quantity, but in the same situation, it will be just 1% of your $100, nothing more. Even if you're using the leverage, you're following the quantity per position. You're not following the quantity just because you want it like that. And that's the only right thing how to do that. And it's really easy in crypto, because in crypto everything is showing to you the quantity that you want to. If you will set it a risk 2%, that basically means that if you're gonna open the trade like this, where the potential earnings will be 5% or 5R, and potential loss is 1 to 5, that basically means that it's double with the risk of 2. So that basically means that you're gonna earn potential not 5 but right now $10, and you will not lose 1 but actually $2. That's all. But again, I'm suggesting to use only 1, or even for the start 0.5. That's basically for the crypto. For Forex, it's a little bit different. For Forex, it is the thing is that the differences in the prices is so little. Like, it's not like even it's 0, it's 1.06700.68. So to have to make some profit on these small differences of the assets according to dollar, right? We need to open the trades in the terminal in lot sizes. The difference is in the lot sizes. It's simple. We are not opening the trade like simply on $100. We are opening one lot size. It's equal to $100,000. One lot size. It's nothing compared with the leverage. You're not over risking or something like that. It's just type of calculating the positions on the euro. So if you don't want to calculate the thing, what does basically mean? That simply means that you need to open your quantity. If it is $100, the stop loss is here, 0.00618. That's your pips amount. Let's make it more realistically looking like that. So for example, your amount pips is 5. You're opening 3 to 1 and something like that. Yeah, so that's not the quantity that you need to insert. Yeah, this is not the one. The thing is, if it's hard to calculate it for you, like here. Let's say you want to follow that 5 and you have 6.6 pips per stop loss. You're simply going to the position size calculator in my Forex book and so on, inserting currency part GBP, account currency USD, account size $100, risk ratio 1%, stop loss pips, you know that already, 6.6, and trade size lots, it's always 1 because it's one trade. And now you're calculating, and now you will see that your risk that you're following is 1%, so basically $1. Units means $1,515, and sizing that you need to look at is 0.02 lots. Yeah. Let's make it more realistically, but I mean 0.02 lots. That's all. I mean, uh, let's for example change that to the $10,000 or maybe $100,000. Yeah. So now we have the quantity. Now we have the ratio, and let's say that we want to have 5 more realistically. 3-to-1 risk-reward ratio, stop loss is 5, and we have how much? We have $100,000. We are going back here, putting $100,000, risk is still 1, and here stop loss 5. 20 lots we need to open, simply. According to the $100,000, 1% of risk will be $1,000. And we can potentially earn how much? We can earn $3,000. That's all. So basically the quantity that is over here, we need to divide on 100,000. So that means on six zeros. If you don't want to calculate it like that, yeah, so like 1, 2, 3, 4, 5, 6, and the quantity of 20 lots will be here presented. Yeah, so that's not the quantity that you need to insert in the terminal. The quantity should be 20 lots over here. But basically, if you don't want to calculate that, or you're afraid that you will make the miscalculating, you need to go for the size calculator, and it will show you that you're opening 20 lots, or basically the units of $2 million. And in this case, your risk will be followed. Okay, so I hope everything is you understand everything here. Any questions about the risk management? No? So should we move to the altcoins, I guess? Okay. Let's move to them. According to the altcoins, so you should understand the one thing about the altcoins. When we are saying about the trading or the type of trading, when like intraday trading or maybe a short-term trading, we should refer only to technical analysis, like what we are looking at the chart, how it looks like, and like looking for the liquidity, synchronization of time frames, and so and that's all. We don't need anything else. When we are looking for the altcoins, we also should understand what are we looking for. Are we looking for the investing in the shitcoins that are basically like a new projects or something like that, that can make us a potential, like from investing in spot like maybe thousands of dollars, that will make us 10x's or 20x's, that will make us potentially make x10 or x20 from our deposit. Not even on futures trading, on spot trading, right? Like if the price was cost like, I don't know, 10 cents and we bought it for 10 cents, now it costs like $1 or something like that. It's just a brief example. So if we are referring to that part, we need to include not just technical analysis, but a fundamental analysis, where we need to make a coin research for all that project and fundamental thing that is called actually fundamental analysis. But before moving to the fundamental analysis, we just still need to look for the technical analysis, and we need to search for the coin and how it looks like on the chart. So if the chart is not readable, if the chart, we don't like how the chart is look like, so we simply don't need to look for this chart. We simply don't need to go for the in making the fundamental analysis, even if the chart is simply not good at all. So right now I want to show you how it needs to look like to have the potential good coin to open, or to open the trade. That's not the best example. Altcoins for 100x. Yeah, so basically we are looking how to look for the potential altcoin and how to invest in the long term. again, about the risk management. This type amount of altcoins, that can be a lot of them. Yeah, a lot of them. For example, you have $100. Let me put, oops. Let me say like that. You have $100. That's your 100%. You have some amount for spot trading. According to this $100 is little bit like 50%. Basically your $50. And your futures trading. It's your 50% or your $50. Okay, so now we are forgetting about the futures because now we are referring only to spot. So we have our spot means $50 means our 100% for easy count. Yeah. In the spot account we have three types of the shitcoins. It's a small capitalization, mid capitalization, and big capitalization. First of all, we need also to divide the thing that the spot account, if we are using $50, we should not use all of our money investing in all our altcoins. So now we need to divide the spot into a safe spot, means $25 to invest, means 50%, and 50% that is left for what? How do you think? For having in cash. Again, for what? For unpredictable situations. So when, for example, you came to the market when the Bitcoin cost like 70,000 and you invest all your money in the altcoins, and after that the market starts to go from the top thing totally down and you lose all of your $50, now you have no money. But if you have the safe spot investing, you have the exactly the half of the investments to start once again, and now to invest your money in the proper place, in the proper zone, according to the market cycle. So you remember, yeah, in total for trading you had $100, but now after all these manipulations dividing by spot and futures, you have only left $25 to invest. So basically means 50% from the $50. That's the really important thing, so please follow that. That's the percentages or the risk percentages that we need to follow. This is not about the allocation, but maybe, I don't know. The small account cap, the small capitalization, that should be followed with the risk as 1%, because that can be potentially huge, a lot of X's, right? But the small capitalization means much more risky, and it's a high risk. That is why it's only 1% from your deposit to invest. Mid capitalization, it's 2% to invest on each of the coin, and this is a mid risk. And here you can invest 3%, and this is a low risk. Of course, as the big capitalization has happened already, like Link or something else, the capitalization of the coin is so huge, so of course it will not make you x10 or x20 from your amount. That is why you need to insert more amount of money to have some differences or some potential good profits and earnings according to the risk of this capitalization. So you need to understand that. Smaller capitalization, yeah, you can earn much more. You can earn x10 or something like that, x15, let's say x20, yeah. So it will be 20x. in the end. Here, yeah, this is a mid capitalization. It will not make you x20, it will make you x10. Yeah, x10, so it will be again 20x, because you invested 2% of in the middle kappa. And the same thing here. It will make maximum like 2 or 3 x's, so it will be around 9-10x. That's what you need to follow. That's so important, that's so crucial. Once again, you need to calculate that, for example, you have 3 projects for a big capitalization, I will say B Kate, a big capitalization, 3 projects, it's equal 9% already of your investing. Mid capitalization 3 projects will be around 5 projects, so also around 10%. And small capitalization, let's say, sorry, 3 projects for mid capitalization will be 6%, yeah. So that's 15. And small capitalization, let's say 3 to 5, maybe 5 projects. That's gonna be 5%. So collecting all that thing in total, you will have 20% of your investments in work. So you already invested. Doesn't matter, you invested them for some period of time, maybe for 1 month, for half a month, for maybe half a year or something like that. So it means, basically means that you, if something will happen and you will need cash, you will not, you should not close your trade earlier to take your money from it earlier, because your expectations or your profit target was somewhere here, yeah, and you should not close your trade somewhere here or here, because you need some cash to, I don't know, to buy something, to go with your girlfriend in I don't know, on the vacation. So that's your, you need to follow your risk percentages. And believe me, you have couple of projects invested in, and this is already 20% of your investments. And remember about that you have here already, you had only 50%, right, for your investments, but here you have 20% already invested. Let's say like you have couple of more projects here, and in total it will be like 20 to 25. Yeah, now you have 25% in cash, so if something is happened, or if new altcoins will be in the market, you will see some new altcoins, potential good altcoins. You will not look for, or where I need to take my cash. You will just simply take the cash from your investments. So you had like $12 in your spot in these things, right? But you will also have $12 to invest in the new altcoins, or potential new altcoins, because your friend or somebody told you that, oh, now it's a good time to buy the Gala or something else, or Rune or whatever. Yeah, and you're like, oh, I need to take some to think where to take my cash, but all my cash is already in my altcoins that was lost 3 years ago. No, that is why you need to have 25% cash left for the new altcoins. Yeah, and 50%, that is a safe spot. It's left in cash for the unpredictable situation. So if the price, for example, you bought it somewhere here, but the price went a little bit lower, and now this is the dip, the actual dip, yeah, because you can buy it lower than 0, yeah. So if you saw something here and you decided, oh, this is the actual dip, and you need to buy more, so you still have 50% left to buy more to your 50%, so for the unpredictable situation. And in this case, your middle price will not be here, it will be here, and of course you will earn potential much more than you could just sitting in the big huge minus. So for all the unpredictable situations you have your percentages, so please take it seriously about the money that I'm saying, and when I'm saying that I'm buying like 1% or 2% per my amount, that's quite a huge amount. Even if you have just in total $100, believe me, investing just like 10 or 15%, $15, it's something that worth it. It doesn't mean that, oh, I have too small amount. What are you telling me? I mean, come on. I'm gonna earn just like couple of bucks. What is it for? For my cheeseburger or what? I mean, of course I'm gonna invest $50. Don't tell me that like shit that you're just trying to describe me that right now. I mean, believe me, if you can follow that risk again on the smaller amount, you will not follow the risk on the bigger amount, and of course you're gonna be stuck in the end. And that is why 99% of people or traders or gamblers are not profitable. That's simply like that. And now about the coins. I hope about the risk you understand. About the coins. So you see that was a big cycle. That was a big cycle like that. Yeah. Usually all these big cycles looks like the same as Bitcoin almost. This is the dip. Yeah, this is your, let's say, your support or something like that. And now the price came into that support. That's actually what you need to look for. When the price is totally came to your support, you have on the left your targets like that. And when the price came into the support, it starts to be the phase of the depression, the phase when the price needs some time. So when we came to the support, that doesn't mean that we need to start taking and buying or something like that. No, as you remember from my start of the conference, the price is having what? The accumulation phase. Accumulation phase. Then the price is having the manipulation phase, collecting all that liquidity from all these buyers, that accumulating all this money, accumulating as fast as possible, and of course the reaction to the opposite side as fast as possible. And then on the test of the zone, basically you can look at it on the daily time frame, you are simply buying your investing in your coin, and of course that will be a smart decision, because first of all you are not freezing your money for a long period of time, because this is like June. Yeah, the manipulation started to be in November of 22. The first reversal is happened as a sign of strange is happened on the December 22, and the entry should be done about the end of the December or beginning of the January of 23. So not to freeze your money for almost for 1 year. Yeah, just simply it's no sense to freeze your money for that. You are waiting for the proper phases, and you're entering your coin after the huge accumulation phase, and the huger accumulation, it's better for the coin. Yeah, it's better for the coin. And of course you need to fix your trade somewhere here, first part, second part. Maybe you can, that's actually should be the biggest target, but if you want to sit more, and if you believe in this coin, you can fix just a part of it and then wait for the big fixes on the left. Or where to fix the price, you always need to look on the left. The left size, the left structure will always help you to look where you need to fix your profit, because as you remember, each of the high is a liquidity that the market is trying to aim. This is a liquidity here, and liquidity here, of course. The same way it was liquidity here, so when the market collected that liquidity, we came lower, yeah, and starts to go lower. So that's how it should look like. Now, for example, Agix, also a nice project. When it's not the best looked like on the trading view, but anyway, it was just going lower, and for the whole year it was in the accumulation phase. And again, it did the liquidity sweep, reversal, and here you could buy the market order or whatever to fix your price somewhere here. I mean, of course, the first fix should be here. the second fix should be here, then the here, and of course if it is the huge potential, should be there. How to look for the coin if you don't know yet either it is good or not? I mean, you should look on the chart. The chart should look like it should not be the new chart or like SNX. Look at the SNX, how it looks like. I mean, dirty chart, nothing to say about. Look at the arch. A little bit better, but I don't like that wicks. Look at the, for example, dot. Dot is, of course, it's not the low capitalization. It's quite a huge capitalization, but that's something, the chart that looks something readable and something that I like. Yeah, because when we came to this place, that was a huge, yeah, the only difference, the only thing that I don't like about the dot is that we are still in the downtrend. It was not a huge accumulation phase here. Look into the ocean. Oh, for example, ocean. Ocean, I like it here. Look at that. We collected all the liquidity. We did the manipulation phase. Yeah, collected the liquidity again. And did the sell to buy move. And this is our zone again to invest in the next impulse. So that is our liquidity pool over here. This is our liquidity pool. This is our, I mean, basically it's our targets to exit, the biggest target, the next target, and so on. So you should look for the NKN, for example. You see, that was also, I don't like this wicks. This is something like looks like a scam. Rose, for example. Again, not, I mean, I don't have the information on the left. That was some kind of liquidity sweep and some nice point of interest zone from which we started to grow. Yeah, maybe it has some not bad potential right now. We need to look more for that, but of course, and according to the chart, not the best one that I want to look for. Again, what will look to PHB, for example? Nope. BNB, nope. Ecstasy, nope. Kava, nope. 1 inch, nope. Gertie, nope. No, I don't like all of them. Chasing, nope. You see, they are all dirty. They're all having, like, they're all dying. What will help you to understand about the coin that will die right now or not when it is like after the big depression? Yeah, when the coin is like for the huge accumulation for the 1 year here, and you like it's almost zero. Yeah, and what will help you to understand, should it go like on the manipulation, like with the reaction, or should it just continue dying? Nothing will help you. Yeah, so do not buy here. Wait for the reversal and buy somewhere here, and to go for this distribution phase. Only like that, and only that thing will help you to understand that. And only look for the accumulation. Don't look for the price that is still going in the downtrend. You need to look for the price that is accumulating the liquidity. The like let me remember, not Ajax. That was Stratis, for example. Strax. Yeah, that was a nice coin because you see, the price came to our bottom, and that was a huge period of time for accumulation. The price was accumulating, and then, of course, what it did the liquidity sweep over here. Local one, and then again the local one over here. And of course, on the daily time frame, we should look for the reversal. Either you're buying some kind of things here, and exiting on the first liquidity pool. Either you're buying some things here and exiting, like buying here, yeah, the reversal happened, the liquidity sweep happened, and you're exiting it on the first liquidity pool here, or maybe on this one, or maybe even on this one if the market is good or appropriate, or even on the biggest one, the main one here. Yeah, you can see that. So how to choose these coins, how to look for them, how, even if you don't like know their names or what to look for, where to look for them and how to look for them. It's so important because the next part, when you're looking for the risk coins, like not the one that you might know about, like I don't know, Ava, Uni, Sushi, Kava, and the Inch and GRT. Yeah, that's basically the high kappa or mid capitalization. You need to look for the CoinGecko or the similar to it websites like Dropstop, for example, the cryptocurrency, and that's actually what is starts to be a fundamental part. So when you like the coin and when you look like to the thing and you said that, oh, I like the artificial intelligence sector, I want to go for the AGIX or for the Fed, but I don't know about these coins. I don't know either it's good or either it's bad. So, but I know that the overall the sector of artificial intelligence should perform quite nice. And I want to enter this sector, but I don't know which coin I should enter. So I found some coin like the Fetch that I like how it looks like, and I want to understand, should I invest in this coin or not. I don't know if it is a good coin or a shit coin, or and what is the project is staying behind it. So in this time, when I like the chart, now I can go to the CoinGecko. In CoinGecko, I need to start looking to the cryptocurrency about the volume and market capitalization. That's the first thing. You need to understand about the capitalization. So when we have the, of course, the capitalizations of the billions, forget about that. I mean, that's too huge amount. By the way, do not believe to the capitalization of the coins. That is not for real, but at least that's something that is showing to us. I mean, that's not, the project doesn't have this money behind that project. Just know that information. But anyway, about the capitalization, so you need to look for, not for the billion, you need to look for the millions. So if you want to have some potential X's, so that's definitely not top 50, right? So you need to look for, if you want the high capitalization, that's something from top 50 to top 100. When the project costs like $700, $700 million, $500 million, $400 million. This is just like a huge capitalization altcoins potential that can potentially worth maybe 1 billion, maybe 1.5 billion, maybe like in future, right? Like something like these projects in top 40, top 30, top 20, like Aptos maybe, and so on. So they potentially can give you, you can see the 2 or 3 X's. So that basically means the high capitalization of the altcoin. Then what is the mid capitalization? The mid capitalization, that's something that is from the page number 2, from the top, let's say not even top 100, maybe from top 20, let's say that starts from the $300 million to $100 million. Let's say to $150 million, something like that. So to the from 120 to 200, top 200. This is a mid capitalization. You probably you don't hear most of these coins, but some of them you heard, like SXP and I don't know, Sushi, Kusama. So that's like mid capitalization where you need to invest 2%, not more than 2%, and that can bring you potential 5 to 6, 7 X's. Then you're going to the page number 3, and you're looking to the capitalization that's called low capitalization. In the low capitalization, that means like $150 million to almost 70 to 80 million dollars. I'm not suggesting you to look like on the page number 4 or 5 okay, maybe some of them from page number 4, but definitely not from the page number 5 or page number 6 that is less than $50 million. Less than $50 million is so shit capitalization, so don't even try to predict or invest in it. 99% of these coins are dying. So, and I don't want you to be in this amount of people that will die with the ship, with the team of the project, right? So that's how to calculate the capitalization. After that, you need to look for the, beside the thing, you need to look next about the project. You need to look for the volume of 24 hours. So of course the volume of the coin should be appropriate. If the capitalization is about like $200 million, of course the volume should not be just $1,000, right? Or what is it, $1 million. That's too little. So it should be like, let's say if it is $200 million, so it should be around 36, maybe 50. That will be appropriate volatility for this capitalization. So that means that the project is alive, so that something is happening with the project, and please be careful to this thing. This one is strange. Too big volume for the market capitalization, I mean, but this one is something that is balanced, like so this is something that is balanced, and so on. This is something that is okay. So you need to look for these numbers. After that, you need to go for the coin itself. When you found yourself a good coin, you need to look for the following things, like the circulation supply and the total supply. So that might be a coin that is not totally unlocked. If you will go for the in the third page, for example, and you will look for the small capitalization coin, like, I don't know, Tribe. Circulating supply is full. No. Yeah, you can see that the circulation supply is not full over here. Yeah, that is only 455 according to the 100 millions according to the 1 billion, right? So that's not the full supply, circulating supply into the market, so you need to be prepared that they're gonna unlock coins and the price will dump sometime when the unlock will start. The ratio right now on this coin, you mean on the Tribe? What is it? The trading volume? No, of course no. It's just 200,000. But I mean, the circulating supply should be full. In general, circulating supply you should have almost full, or like 90% of unlock should be on the market already. So it will not affect you when it will be the total unlock, and it will not affect on the price. The circulating percentage of the supply should be, let's say, 15 to 20%. 15 to 20% of the whole capitalization. It's something normal, right? After that, you need to start making your fundamental projects. It's normal thing that will take time, that is quite boring, but that's something that all investors are doing all the time. So they are looking for the other scan, they are looking for the big players, for the of course for the whales of the market. Other big people are still holding this token for the long supply. For do they lock the token for 1 or 2 years for the, and do they just sit it, or they just try to sell it as fast as possible? So what is happening with the money? And next thing, you need to go for the community and to look either the Twitter of this community is still alive, or how many likes they have, and so on. After that, you need to go for the website to look what is the project about, to look what are they, what is the project is behind this coin. Either is it something unique, either it's something nice that you should follow for or not. Next thing, you need to go for the white paper and for the roadmap to understand what this project starts to look for, how they sharing the money with the investors, how they sharing the money with the people who helps the project. Do they have some active in the Discord? Do they share some nice bonuses with the people who help them in the Discord? Then you like all that thing you need to look for. You need to look with what chains do they work, with what wallets do they work, and after checking all that thing, and if the most important thing is the white paper that you need to read about and the community. If the community is really alive and hyped, believe me, even if something is not quite good in all other cases, the community or the hype of the community can help the project to rise and to pump, even if it's not the best project itself. So that's the thing that you need to look for the crypto. Okay, guys, that's the general thing. Of course, I mean, there are some more nuances, but I mean, one stream is not enough to explain all that thing. This is just a part of my knowledge that I can share with you here to encourage you to search for the logic, not to lose your money or not to waste your money on the stupid decisions, to start, looking for the confirmations, looking for the liquidity, and not to do all that scam thing with the indicators, support and demand, EMAs, Bollingers, MACD indicators, profile files, divergence, and whatever, guys. You all know what I'm meaning about. So, the simplest is the key. I hope that was useful for you. Please, if you have some questions, I'm ready to answer them now. We still have 5 minutes, and if no questions, just prepare some nice questions for the next stream. What do you want to listen for? Maybe we're gonna make it on a Saturday, or maybe Sunday, next Sunday, we'll see. Yes, this video will be recorded, so you can watch it whenever you want. Of course. I mean, on the YouTube, I'm basically doing some general videos about the market. Of course, I'm giving a lot of useful information here as well. But for the concept itself that we are looking for, I'm giving the basic conferences in the community, not in the web, of course. If you have any topic that you want me to explain on the next conference, I can explain it here in YouTube as well. That's not a problem. Thank you for subscribe. You can share it as well. I've never asked it before, and for me it's kind of a little bit not. I'm not used to ask for the subscription or something like that. It's. I'm even into my ear, I can hear that it's a little bit weird, to ask for the subscription. But now it's a part of my profession, of my academy, so I would appreciate for your likes, comments, and subscription. Don't forget to put the notification, the bell for the next conferences, and so on. Yeah. Okay. Thanks, guys, for listening. It's a pleasure for me to help you. And see you next time. I'm always in Discord. By the way, you can see in the bio under the video, you could find all the links if you want to follow as well. So, where I'm also sharing my information all the day, where we are trading together in live, where we are taking in live our trades for forex, for crypto, and so on, with the mentors and so on. So whatever you like. Thank you. See you next time, and have a great weekend, and bye bye.